Yeah, at Middlefield, our DNA is equity income. So that doesn't mean that stocks can't go down, but we continue to get paid. Part of our total return of our funds that we try to give to our clients incorporates a level of dividends. So, over the long run, dividends is, anywhere from 1/3 to 2/3 of a total return on an equity investment. So, anywhere from 2 to 6% can come from dividends, and reinvesting that dividend is very important. So that's kind of high level how we look at stocks. We're looking to provide that long-term equity rate of return, 6 to 10%, to investors to complement their bond portfolio. And if we can start the year off knowing that we're going to get a dividend of, like I said, between 2 to 6%, depending on the company, plus a growing dividend, we like to buy dividend growers, that helps us achieve our goals for our clients, which are trying to meet their long-term investment financial goals.